and with their 30-day money-back guarantee, there's zero risk in trying it out. In 2008, like most other major nations at the time, Canada's economy started taking an aggressive dive in the wake of the GFC. However, thanks to a combination of a housing and financial market that wasn't quite as overheated as the USA, and resource exports to China, it was not hit as hard as the rest of America and Europe. The country did originally manage to not only bounce back from the crisis, but witness a similar resurgence in the following 2 years. What separates them is that nations like the USA continued to see unprecedented growth, while Canada's ride wasn't nearly as smooth. In fact, it started an extended period of stagnation. After the 2014 oil market crash, Canada has continued to reveal a fairly long chain of troubling vulnerabilities, with a decline that's often been noted as one of the worst amongst developed economies. Among these vulnerabilities is one that Canada isn't necessarily dealing with exclusively, but it's become such a massive problem that it's almost come to define the country's economy, and that is of course housing. Aside from the obvious zoning laws and regulations, the country has made a series of mistakes that made its housing affordability uniquely horrible in comparison to other Western nations, a lot of which can be attributed to lowered interest rates, as well as how they view real estate as an investment. Of course, lowering interest rates is a standard for countries in the wake of a crisis. If nothing else, it's often used as a psychological tool to increase consumer confidence, to avoid the death spiral caused by less borrowing, less spending, and less investment. This, on its own, is stock-standard counter-cyclical monetary policy, nothing that unusual. But it did cause a few problems specifically for Canada. For starters, their housing market never really suffered as badly as the USA during the crash, because although it may be hard to believe now, lending and real estate investing was a lot more controlled in Canada at the time. Now that's a good thing by itself. But when the country lowered interest rates, largely in line with most other advanced economies around the world, it boosted a market that never really felt the correction in 2008.